Welcome back. You're watching NewsX and I'm Vaishali Kohli. Now, in a major boost to bilateral ties, India and the US have released a joint statement announcing a framework for an interim trade agreement. This historic step, viewers, building on discussions between PM Narendra Modi and President Donald Trump, paves the way for a broader bilateral trade agreement. Both countries said the interim deal reflects a shared commitment to fair and balanced trade, improved market access, and more resilient supply chains. The agreement is being positioned as a key step towards a comprehensive trade pact between the two partners. Let's take a look at what the joint statement really states. Let me show you that, viewers. Now, let's look at the joint statement. Now, we're talking, viewers, about the India-US trade deal. This is the joint statement. Point number 1. India will eliminate or reduce tariffs on all US industrial goods and many agricultural products, including DDGs and tree nuts. Point number 2. Now, the US applies reciprocal 18% tariffs on originating Indian goods like textiles, apparel, and leather products. Point number 3. The US will remove tariffs on certain Indian aircraft parts and provide preferential quotas for automotive parts. Number 4 would be both nations commit to provide preferential market access in key sectors of mutual interest on sustained basis. Point number 5. The US and India will establish strict rules of origin, ensuring agreement benefits accrued primarily to both countries. And now talking about point number 6, viewers. Now, both countries will address non-tariff barriers, including India's commitment to resolve issues in medical devices and ICT goods. The 7th point, viewers, is US and India intend to discuss standards and conformity assessment procedures for mutually agreed sectors to ease compliance. Let's get to point number 8. Now, if either country changes agreed tariffs, the other may modify its commitments accordingly in response. Both nations will work to expand market access opportunities, and the US and India agree to strengthen economic security alignment for supply chain resilience and innovation cooperation. So that is the 10th point. And the 11th is that India intends to purchase $500 billion of US energy, aircraft technology and coal over 5 years. 12th point, viewers, is that the US and India commit to address barriers to digital trade and develop robust rules in the bilateral trade agreement. So this, viewers, of course, is an overview. We don't really have the final terms of the agreement, but this is, of course, an overview. Now, I do have joining me on the broadcast Mr. Akash Jindal, who's an economist. Mr. Jindal, we've laid out the initial terms of the agreement. What would you like to say?
I think it's a very good agreement. It's going to be highly beneficial to India because what happens is now our Indian exports would increase our GDP would increase, our per capita income would increase, manufacturing would increase, and Prime Minister Modi's dream to make India third biggest economy and a 5 trillion US dollar economy, that would now be fulfilled, because now what would happen is India and US, we have been one of the biggest trade partners. US has been one of the biggest trade partners. Rather, they have been our biggest trade partners for many months. So it would be great opportunity for us to do a lot of manufacturing and a lot of exports to US, and that would also make our ties stronger with our old friends US. So I think that it's going to be a win-win situation for both India and US, wherein we'll get to export lots and lots of products. See, already we know US, since the time they have imposed tariffs on India and other countries, US is not itself comfortable with tariffs. They have themselves been sufferers of their tariffs. Now, post tariffs, what happened was these tariffs were levied last in August 2025. Post that, what happened was India was not impacted, because even for that quarter in which tariffs were imposed, July to September quarter, India had a robust GDP growth, that is 8.2%, and that GDP growth has been the highest amongst many last quarters. Post that, also in November 2025, export data shows that Indian exports to US had increased by 22%, and overall Indian exports to all countries also had increased. Indian exports to EU had increased by 14%. So India has been growing anyway. Our income tax collection data says 17 December 2025, our income tax collection has grown by 8%. GST collection data for December 2025 shows that we have grown by 6% as far as GST collection is concerned, but US has been suffering because of the tariffs. Because viewers have to understand, whom did US impose tariffs on? It was said that they have imposed tariffs on India. No, they had imposed tariffs on their own importers who were importing from India. So what happened was, because of those tariffs, inflation in US intensified. Inflation increased in US, job losses increased in US, and inflation, let me tell viewers, in US is higher than that of India as of now. The US has never been known for high inflation. Rather, for many years, US had nil inflation, had very little inflation. Now, US is having 2.7% inflation. US is a country where many people go and they have a dream to go and work in US, but that US is not in a position to give its own people jobs. Now, US had a unemployment rate of 4.4%. So US has been a huge sufferer of these tariffs, because tariffs, what happened was, the products US was importing from India, they became costlier. Now they became costlier. What happened was inflation grew for the common man of the US, for the customer of the US. So that is what impacted them. Not only that, there were many products which were raw materials also for the industry. Now raw materials for the industry also became costlier. That also negatively impacted US. And we already know US may be the biggest economy in the world, but they may be the most powerful economy in the world. But that powerful economy or that biggest economy is not a very efficient economy as of now, because for past 17, 18 years, what we have seen is US economy has been a deficit economy. Deficit means that their expenditure has been higher, income has been lesser. Just around 2 years ago, US had an issue where they had to suspend their debt ceiling. What it means is US, they have a ceiling, they have a limit that up to this extent US government can borrow. But just to have their expenditure met, they had to suspend their debt ceiling. They had to come out with a law, suspend their debt ceiling, so that they could raise more funds in order for the US to function smoothly. So US is not in a very good position. So it's good for US as well as for India. For US also, it's good that they have, joined hands with the fastest growing economy. We are the fastest growing economy today. It's not only Akash Jindal which is saying that we are the fastest growing economy. World Bank itself has predicted that for 2025-26 we are going to have 7.2% growth, which makes us the fastest growing economy amongst major economies, or amongst economies which are equivalent size or bigger size. So it makes sense for US also to join hands with us. And in case US wants a counter against China, India is best placed. So it's good that both India and US have joined hands. Agreement has been signed. Now this is going to be highly, highly beneficial for our manufacturers, for our exporters. Plus, it would make rupee stronger against the dollar, because now there would be a huge inflow of dollars into the country when we'll be exporting a lot to the US. And also, it's going to be beneficial for us, because what happens is, now foreign portfolio investors which are investing into Indian stock markets, primarily many of them are from US. So now with business going on a better level with US, foreign portfolio investors also would be more interested in coming to India. Plus FDI also would be coming on a higher basis to India, because now when the governments have started, they have decided to increase the business. The US government has decided to lower the tariffs, and the relations between the countries have become normal. Business relations have come between the countries have become to normal, rather better quality relationships. So now foreign direct investors in US also level investing into India. So I think it's a great deal. I would rather thank our Prime Minister Piyush Goyal Sahab and all of the people who have been responsible in getting this deal done, because it's a wonderful deal. It's a great deal. Our GDP is going to increase. Our forex reserves are going to increase. Per capita income is going to increase. Indians are going to benefit. Manufacturing is going to benefit. Exporters are going to benefit. And already we have seen our stock market. The day this deal was done, the next day, our stock market, our Sensex, it opened around 3,500 points up, and during the day also, the market was, for the most of the time during the day, it was more than 1,000 points up. So we have seen how country is happy with this deal, our businesses are happy with this deal, and ultimately it's going to be highly, highly beneficial for our country.
All right. I also have Dr. Arvind Singh Tejawat, Foreign Affairs expert. Dr. Tejawat, of course, I'd like your comments on the outline of this agreement which has come out. Of course, I've had very interesting discussions with you on the past as well, where you're perhaps the very few who say that this isn't a very good agreement when it comes to India. So I'd like your comments on the initial terms that have come out.
Thank you very much, Vaishali, and you are right that maybe at a first instance it might be looking a good deal, but the United States has really taught us a good lesson. The United States has taught us that if we'll create a dependency on the United States, and if we'll not find some more partners, maybe like the European Union, then of course we'll be losing our strategic freedom very soon. So we need to reduce our dependency on the United States. That's very much right. And we can learn from the China that if you are creating a dependency, then of course, then you are capable enough to go for the bargaining. The China did the same thing with the United States. So we need to think about it. On the other hand, we need to think about if the India is agrees to go for the 0% tariff on American agro products, then you see the American government is giving a great discount to their farmers to protect their income. But vice versa, the Indian government is not doing. It's not only about the BJP regime, but from the Congress government, the farmers were going for the suicides, and it continues. So if we see that this deal is going to benefit the common people like farmers, then of course I will nod a hand. And at the same time, what exactly this deal is going to get a benefit for, then if we are buying the Venezuelan crude oil, then I think that the Jamnagar refinery is capable enough to refine it, but in that case, only a certain business group or a particular corporate house will be benefited in the coming future. And so we need to think about all the aspects, but at the same time, we can welcome at least that it saved uh, our the relations, especially in Air Force. We are a little bit, or not little bit, maybe we can say that we are enough dependent on a United States. So, okay, fine, at least the United States is agreed to go for a very less tariff on the, uh, the equipments and what our Air Forces and the defense groups will be purchasing from the United States. So, okay, it's a mixed kind of, but it's a good lesson for India for a future that never ever create any dependency, because no is going to be your permanent partner in the future. Vaishali, over to you.